Is Alibaba trying to trade profits for the future by continuing to invest heavily in the AI? Alibaba released its fiscal year 2026 and Q4 financial report. This is a report rife with contradictions. Data shows that Alibaba's annual revenue surpassed the trillion yuan mark for the first time, reaching 1.02367 trillion yuan, a year-on-year increase of 3%. Excluding the disruptions caused by disposed businesses such as Sun Art, retail, and In Time, the year-on-year revenue growth on a comparable basis reached 11%. However, the full-year operating profit was 50.15 billion yuan, a year-on-year decrease of 64%. The adjusted net profit for the full year was 60.658 billion yuan, a year-on-year decrease of 62%. And Q4 even saw an operating loss of 848 million yuan. Furthermore, AI is becoming the main engine of Alibaba's revenue growth. Quarterly revenue from AI-related products reached 8.971 billion yuan, marking 11 consecutive quarters of triple-digit year-on-year growth, with annualized AI revenue exceeding 35.8 billion yuan. First, AI reaches a commercialization inflection point. Alibaba CEO Wu Yongming stated, Alibaba's investment in full-stack AI technology has officially moved beyond the initial cultivation stage and entered a positive cycle of large-scale commercial returns. During the conference call, Wu Yongming said that Alibaba's AI model and application service, ARR, is about to exceed 10 billion yen, with a year-end target of 30 billion yen. At the AI model layer, Alibaba released the QWN3.6-Plus large-scale model in March, supporting native context window lengths of up to 1 million tokens. It also launched the Happy Oyster word model and the Happy Horse video generation model. At the chip layer, Pintook's self-developed GPU chips have achieved large-scale mass production and widespread industrial applications. As of February 2026, it has delivered a cumulative total of 470,000 chips, with over 60% of its computing power serving external commercial customers, covering core scenarios such as the internet, finance, and autonomous driving. At the AI application layer, Alibaba has launched multiple enterprise-level intelligent agents, covering scenarios such as office work and programming. The C-end application, the Qian1 app, has fully integrated e-commerce service capabilities. Looking at the financial reports, Alibaba has indeed achieved accelerated breakthroughs across various technological levels, including chips, cloud infrastructure, big data models, and applications. For example, Alibaba Cloud's annual revenue reached 158.132 billion yuan, a year-on-year increase of 34%, making it the fastest-growing business segment within Alibaba. Q4 revenue alone reached 41.626 billion yen, a year-on-year increase of 38%, with external commercialization revenue growth further accelerating to 40%. Comparing this to the recent financial reports of the seven sisters of US-listed companies, Google Cloud's operating profit increased from $2.2 billion in the same period last year to $6.6 billion, and AWS's Q1 revenue reached $37.6 billion, a 28% increase, the fastest growth in 15 quarters. It's clear that AI Cloud is comprehensively boosting the revenue of the world's leading technology companies. Second, trading profits for the future. For Alibaba, it is undergoing a transformation of trading profits for the future. Financial reports show that Alibaba's R&D expenses in fiscal year 2026 were 66.533 billion yuan, accounting for 6.5% of revenue. Excluding the impact of equity incentive expenses, product development expenses as a percentage of revenue increased from 5.1% in fiscal year 2025 to 5.9% in fiscal year 2026. Tencent's Q1 2026 earnings report, released on the same day, shows that the company's capital expenditure payments for AI-related investments amounted to 37 billion yuan, with 31.936 billion yuan included in the current period's capital expenditures, representing a year-on-year increase of 16% and a significant quarter-on-quarter increase of 63%, setting a new high for a single quarter in recent years. These two giant companies have reached a certain consensus on increasing AI investment. But how this investment will translate into excess returns remains unclear. Alibaba CFO Xu Hong admitted in the earnings call that AI investment led to negative free cash flow this quarter. However, he also stated that this window of opportunity only lasts a few years, and Alibaba will continue to invest firmly in AI for the next 2 years. Alibaba's net cash flow from operating activities in fiscal year 2026 was RMB 76.213 billion, a 53% decrease compared to RMB 163.509 billion in fiscal year 2025. Free cash flow was a net outflow of RMB 46.609 billion, compared to a net inflow of RMB 73.87 billion in fiscal year 2025. Net cash flow from operating activities in Q4 was RMB 9.41 billion, a 66% decrease compared to the same period in 2025. Free cash flow was a net outflow of RMB 17.3 billion. Alibaba stated that the core reason for the significant revenue decline was the company's massive investment in two strategic tracks: increased spending on user acquisition and cloud infrastructure for the Qianwen app, and investment in its instant retail business. During the conference call, Alibaba senior management repeatedly emphasized their unwavering confidence in their AI strategy. Wu Yongming explicitly stated the return on investment in AI will be extremely clear over the next 3 to 5 years. He revealed that due to exceptionally strong market demand for AI, to achieve its goal of exceeding $100 billion in annual revenue from cloud and AI commercialization over the next 5 years, Alibaba's future computing center assets will be more than 10 times the amount before the AI boom in 2022. Over the next 3 years, Alibaba's capital expenditure will far exceed the previously committed 380 billion yuan. Previously, Alibaba's US-listed shares experienced pre-market volatility, initially rising slightly before falling, with a maximum drop of 4%. After opening lower, the shares rallied to close up 8.18%. As of press time, Alibaba's total market capitalization in Hong Kong was approximately 2.69 trillion Hong Kong dollars.